Hey, this is Scott Cole from besttipsfortrading.com and bestdaytradingstocks.com, and just wanted to do a little weekend market analysis covering what we did in the last week, and obviously we finished this past week's trading in the stock market on the downside on a down note, and down for the week. So here's a chart of the Dow Jones Industrials. This is where we finished up Friday. It closed at 11,240. Dow Jones Industrials were down 2.2%. The S&P 500 was down 2.53. And the NASDAQ Composite was down 2.58%. So pretty much uniform across the board, down over 2%. In the major averages, that means we had a true selling day on Friday, and this is our first true selling day since we had the bullish confirmation signal to the upside on August 29th. And we've closed well under that particular day's close. This would suggest to me that if we're going to make any movement to the upside, it's going to be quite difficult, and there is definitely no all clear signal to the upside for the bulls. So at this point, you have to basically think that we're going to go and test the bottom end of the range again. On the NASDAQ, that'll be down about the 2340 range. The low of August 9th was 2331 and change. And on the S&P, I believe about 1100 is the low. 1101.54 on August 9th was the low. The low close was about 1120. 1119 was the low close on August 8th. So we're probably going to test those lows. It's hard to imagine that we're probably going to go back up to the highs that we just saw this past week, unless we get some really bullish kind of news out of Europe. A lot of this is dictated by Europe, and then obviously we had the lousy employment report on Friday, which showed no net new jobs for the economy. The previous 2 months' estimates were also revised downward. I still don't get why the unemployment rate is unchanged at 9.1% considering the revisions from the last 2 months. That suggests the labor force has shrunk even further, which is not a good sign. Also, average hourly earnings are, from what I understand, were down, and the number of hours worked was down. So not only are we not creating jobs, people are working less, and that suggests companies are pulling back again. So not a positive sign here for the economy. President Obama will be coming out with a job speech next week. Most people don't think it's going to do much except reiterate some past calls for infrastructure spending, possibly another payroll tax extension, holiday extension for unemployment benefits and such, but there's a lot of other issues going on there. The regulatory climate seems to be causing headwinds on business, and that would suggest that this market also does not have much of a chance of going higher in the near term. So bottom line is Friday's trading was devastating to the bulls. The only Silver lining is that volume was light due to the holiday weekend. So the traders will be flocking back to New York on Tuesday, I would imagine. And all eyes will be on President Obama's speech next Thursday, and we will see where things stand after that. But it looks like we're getting set to test the low end of the range again, and if we break through that range, I would suggest that we're going to be heading quite a bit lower. I believe 1050 is probably the nearby closest form of support once we break through 1100 on the S&P. So if you have any long positions, I suggest scaling them back a little bit if you haven't already. This looks like to be very much a trader's market. I don't see much directional bias in either direction in the near term. Remember, September tends to be a crappy month, so we could go a little bit lower here, but you know, there's gonna have to be probably a lot more turmoil in Europe and some further weakness in Asian economies to really drive us further downward from current levels, because valuations are definitely quite cheap at the moment. So that's it for this little update for this weekend, and we'll see you on Tuesday after Tuesday's trading.